Reality doesn't really matter. The most important thing is that you control the narrative. You are ultimately the profit mechanism. Why would they pay for your orders, for the right to fill your orders, if they can essentially suppress price discovery?
That's the magic of options. The downside, obviously, is it can go to zero. So you never want to do them, bet with anything that you can't afford to lose.
You do not know who the exit liquidity is, and you don't know the profit mechanism. It's probably because you are the exit liquidity. Some people would say trust but verify. I say don't trust whatsoever. Go look yourself.
Cause we pop 'em like overridden vodka. C3, okay, a millionaire. I'm a young money millionaire.
Nothing's working.
There he goes. There he goes.
As you can see, I'm looking my best right now. I am currently under the weather. I got a fever. I got something in my throat, my lungs. I'm beaten up. But we're going to get this fixed too. We got the bottom part. This is not Scott Elam. This is, of course, father of trades. We're having some admin issues on the back end, but when you're sick, nothing goes right. So I'm showing up, dude. This is
I was about to say, this should tell you that Avi loves you enough that he's going to show up even when he's sick. He's Jordan, right? He's gonna show up with the fever. He's still gonna crush it for you. Okay. So this is his love for you coming through the screen right now.
Exactly. I appreciate you. And then the day's not doing so hot, right, with the markets. And so instead of going through everything today, we thought, hey, why don't we do a little options education? You've been doing this for quite some time.
Absolutely.
So what is your background before? So people say, I'm not just listening to some guy that just started doing this yesterday. Obviously, if you've heard you know what you're doing here. But what's your background first and foremost with options trading? And then we'll dive in.
So my background with options trading is honestly 13 and a half years of trial and error. To be quite honest, that's the biggest thing that I could say. I borrow from a lot of other people's approaches, right? And for the most part, what I like to do, as you know, is I like to find these undervalued small and mid cap companies. And I like to take these big long-term swings on them, right? Aiming for really, really large outsized gains, to the point where a 40% accuracy rating can still be just tremendously profitable. A little bit about my background before this, right? Before I was trading full time and kind of streaming and teaching, right? I spent about 5 years as a licensed banker, right? So I carried a few certifications with me that have now long since expired. And then I ended up managing the budget for the maintenance department of one of the largest school districts in the nation for about 5 years as well after that. So my my background is in like accounting and finance in general, before I kind of got to the point that I'm at right now.
How long did it take you before you felt like comfortable? Because when I first got into options trading, I was following Smarter Trader. So I don't know if you know him, but he was like one of the OGs on FinTwit. And I had no idea what options were. And he was just talking about these stocks. He was talking about options the whole time. I was just buying the equity. And it worked. And the directions, it still worked. But it took me a while. And then I still don't think I'm the best at it, and that's why I bring you on. That's why I bring Sniper on. It's an acquired skill over time. And Absolutely. If you bring up charts for someone, you ask 10 different people, they'll give you 10 different charts basically. Right. So how do you specifically figure out, okay, this is the play, and how do you know if you're going to take a more of a long-term position versus something that's zero OTE or, something that's, weeklies?
So when it comes to weeklies, I'm going to just be playing the trend, and I'm not going to be I'm not going to be factoring in many things like fundamentals of the business, right? I'm not going to be looking at any of that really. I am literally playing the trend, and I'm generally leaving same day, right? So for instance, this morning I ended up scalping some puts on QQQ just because it was going down, right? So I was like, all right, there's sellers. I waited for us to come up and tap this area of clear resistance. And once I saw that wick form and we started kind of dropping down, I was like, all right, there's still a bunch of sellers here. So I'm going to be one of them, right? So I pick up the puts. That's a synthetic short because I don't hold the shares of QQQ in that account. So it wasn't like a protective put. And, I just exited when we found support, right? Sold on resistance, exited on support.
What would you say? Like I pulled up, like I have 5 myths that I think like everyone says options are much riskier than stocks. Would you agree that that is true?
I would agree that the way that most retail trade options is a lot riskier than stock.
Mm.
I think that when we are using options properly, right, that they are a little more risky, but it's not like nearly as extreme as you see, for instance, on like Wall Street Bets, right? You see it all over stock twits. You probably see it all over Twitter too, or X.
Mm.
That people are betting on these zero DTEs and then wondering what happens when theta comes and absolutely rips them a new one.
Yeah.
Right. So I think that if we're using options properly to hedge existing positions, maybe you're selling covered calls so you can generate some income while you're waiting on an investment that you hold, right? That's been kind of stagnant, and you're just maybe like laddering them, right? 10% of the position gets covered calls written on it every week, a month out, right? So you're never at risk of like selling more than 40% of the position, right? And you're using that as kind of like income where you can accumulate more, or maybe you're just using it, to go to the fucking bar. Like, I don't know what you want to do with it, right?
Mm.
But that's not as risky, right? And then if you are taking kind of like those big longer swings and you're taking the Paul Pelosi approach, then yes, there are risks, but basically the way that you would be structuring these trades is that one or two of them go your way and the other 8 that didn't, they don't matter.
Yeah.
Right?
Well, and that's the biggest thing is so with Sam when we trade in his room, he says it straight up, like expect zero, and
Yeah.
if you go into it with that mindset, then it's a different game, right? So you don't
Absolutely.
want to just he does a lot of it, and like typically I'll size my I call them the bets. I'll size them like 2000s, like my absolute max that I'll do, and that's like a bigger trade typically.
Absolutely.
But most of them, are 100 to 500, I'd say. And the one thing that I think a lot of new people into options, you're always looking for that like 2,000, 5,000 percenter, and those are rare. They do happen.
Yeah, they happen.
But I'd say like there's oftentimes you're up like 30, 40%, right? And like that's incredible. If you get a stock that goes up 40% in a day, you're very, very happy. So that's the magic of options. The downside, obviously, is it can go to zero. So you never want to do them, bet with anything that you can't afford to lose. And you can go very quick. I have a story that I had a $12,000 account. I took it to 320 and I took it right back down to 10,000. So I'm fine to admit that. And, I'm thankfully have now brought that, close to back up already now. But you can round trip very, very quickly. So
absolutely.
One other myth, you need to be right about direction to make money.
So if you're trading directionally, you do, but there are ways that you can structure trades where essentially you wouldn't be betting on direction, right? What you would be is like long or short volatility, right? So let's say that a stock has been incredibly volatile, right? Maybe following up on earnings, right? So stock stock was a little bit volatile going into earnings. Earnings happen. There's a big surprise. Stock starts going haywire. It's moving all over the place. Big spreads. What you could do in that case, right, is you could open up a strangle, in which case you would be benefiting by a decrease in volatility, right? So as what you are, I guess the profit mechanism is that the stock begins to just consolidate, right? So you can structure trades in that way. You can also just be like delta neutral, right? Where you can say, hey, I'm levered to the same degree, like 2x to the upside, 2x to the downside. And when it starts going down a little bit, like maybe I trim that long side a little bit if I think that it's going to continue to go down, right? And now you are hedged no matter which direction. And the only thing you're really fighting against at that point would be theta, right? Time, the decay of time. So there's a few different ways that you can structure trades where you don't necessarily need it to be directionally correct, because you're not always going to take a directional trade, if that makes sense.
No, totally. And those are probably more complicated for like options 101.
Yes.
Puts and calls are, kind of where I still do it. And I use it mostly to hedge my positions. So if I have a huge Nebius position or, a huge Tesla position, if I am worried, come earnings, I'll take
Buy
the,
some
I'll
puts.
grab some puts as insurance just to have
Absolutely.
some extra cash too to buy it again.
And that's really like the beauty of options, right? That's absolutely the beauty of options, is that we can do things like that. Another example of something really similar that gets done all the time by like market makers, and I mean really just institutions in general. What you'll see is that they will enter a short position, and as they are shorting this thing down and slowly walking down price, they are also simultaneously picking up out of the money calls. So that way, if for whatever reason something changes or there's a big influx of buyers, right, and the price ends up rocketing up, well, they're going to lose on the short shares, right? They're short common shares, but then they might end up breaking even because they have a levered position to the upside. Right. So there's a lot of different ways that options can be used. I mean, they're a tool in our tool belt, right? You have your hammer, you have your screwdriver.
You're primarily options, though, right?
Yeah. So for trading, yes. For investing, not so much. But sometimes what I'll do is I will take like leaps in my like retirement investment account, and I'll use them almost as a proxy for the stock, but with that inherent leverage that exists because I'm in options, right? Because I'm long calls.
Yeah. One thing that I learned early on with options is some of the small caps, and you're trading a lot of them, they don't often have the volume, right? And so you can't, the spreads are so big, you can't necessarily get out. Where if you're trading like Tesla or MSTR or any of these bigger ones, you can get out pretty quickly.
And
but
that's
you got to be careful.
That's the thing, is you have to like spot that on the chain, right? So if you are looking at an options chain and you see a strike that maybe looked right, a strike and expiry that looks attractive to you, but then when you go and look, you see that the open interest is like 30 contracts. Well, there's probably not really the liquidity. There's definitely not the liquidity to enter with any kind of size. And there's probably not going to be liquidity when it comes time to sell either, which means that you're probably going to have to end up selling into the bid. So you're really going to need to be right directionally on that, right?
Yeah.
So it's there's a little bit of a learning curve with that, and picking the right strike and expiry, right?
What are your thoughts on trading into earnings? I was told never to trade into earnings. I always go at least a week out.
So trading into earnings is notoriously difficult. I will say that I don't do it a lot. I do it sometimes. for the most part, what I do is I hold through earnings, to be honest with you, right? Like if I have a longer term swing, that's out in, 5 to 18 months out in the future, like I'm just probably going to hold through earnings. But
Mm,
trading into earnings, especially with something that's low DTE, right? It doesn't have a lot of time left,
mhm.
like weeklies. You are generally just going to get IV crushed out of that.
Yeah.
But there is there is a chance, right, that if you are directionally correct, and again, they have to like shock the market. Like
Right.
it has to be either a big beat or a big miss,
Mhm.
and it has to not be priced in beforehand. So
Yep.
you might see, for instance, like a stock is rocketing going into earnings, right? It's absolutely rocketing going into earnings, going up. Okay. Then there's this big beat. And then that first candle, right as earnings are reported, first candle goes up. And
Mhm.
everyone's like, oh my God, I'm rich. This
Yep.
is gonna go to the moon. But then you figure out that they were just grabbing liquidity and they slam that motherfucker right back down to the ground and start taking it down, right?
Yep.
That happens all the time. So you also have to be aware of kind of like the situation that's happening within the market for that ticker, right? Because we could say that there's like the broader markets, but then each ticker is its own market, right? Essentially. Um, so like we need to be aware of that, and then you also need to be aware that probably 90% of the time, if not more, the implied volatility is just going to be crushed by earnings, right? Because this is the unknown transitioning into the known, right? And the unknown is what really gives it that implied volatility, right? The chance that something spectacular can happen. But once we know the results, the chances are generally low unless they're incredibly shocking. So I don't like to trade into earnings, but I often like to pick up after earnings and take advantage of that IV crush because then everything gets really cheap.
Oops, I was off. Let me do a quick 101 here for the Greeks, for those, because I mean, I get delta, and theta, but like Vega and Rho, I don't know, to be honest. So, uh, if you know that some of these, let's go through some of them just to kind of describe them for people.
Absolutely. So delta, it's funny that they have like the five main Greeks, but to be honest with
They
you,
may have
it's
more down
it's
here.
really like three that are the main ones, right?
Yeah.
So first, I guess we should start with delta. That's the easiest one. So delta is basically the relationship between the price of the option and the price of the underlying stock. Okay.
Mhm.
So let's say that something is low DTE, right? And it is uh, at the money, right? Well, then the delta is going to be very close to one, which is the max the delta can ever be. Um, as it moves into the money, it is going to end up being one, right? Like it almost always is going to be one on something that's shorter term. On something that's longer term, right? Maybe something that, let's say, that's a year out, that delta is going to change much more slowly, and it's going to have to go deeper into the money to get to that one mark. So basically the way that we can think about delta is that for every, let's say, every dollar that the stock price changes, right, the underlying stock that we're trading options on, right, for every dollar it changes, if delta is 0.30, then the options price will change by 30 cents,
Mhm.
right? And then again, right, if let's say that delta is 1, for every dollar that the share price changes, the options price will also change by a dollar. Okay. Theta. Theta is, I guess, actually one more thing about delta, right? So when you are trading low, low, um, like DTE options, right? If you're trading like zero DTEs or weeklies or even something that expires next week, right? Something very, very short term. Delta is going to generally be the biggest driver of the value, right? That is where most of the change is going to come from in the value of the option. And you are going to be fighting against theta. So, what is theta? Theta is essentially just time, right? There's a really interesting like bell curve, right? Not a bell curve. Bell curve's not the right word, but basically a chart showing kind of like the curve of theta. I have it somewhere. Anyways. So
Try to find it.
yeah, so theta is theta is time. Time has a value. The reason that time has a value is because there is more time for number one, change in price, and number two, for something to happen, right? So when we are looking at something that has more theta, generally it's also going to have more implied volatility, right? Because there is more time where something big can change, something can happen here. Now, time, if you are, let's say, 700 trading days out, right? Every day that passes, you will lose 1/700th of the time value in that option. Okay. But now let's compare it. Perfect. Exactly. There we go. So now let's compare it to something that is expiring tomorrow. If you hold that overnight, you are instantly going to lose 50% of the time value the second that the market opens. And every single minute that passes, you will lose additional time value. And it's not noticeable really like too much when you're really far out in time. But if you are, again, trading something that's shorter term, this is like the thing that you are battling against, right?
Mhm.
The stock, the underlying stock needs to move in the direction that you want it to. Okay. It needs to move in the direction that you want it to faster than time burns away. So that's why a lot of people get burned on these really short term options, is because they don't understand just how much value there is in the time in their contract and how
Yeah.
quickly it can leave.
hmm I started with leaps, and I know that's what you like to do too.
That's
I got
my
very
favorite.
lucky. I was talking with Peter Beck from not SpaceX,
Rocket Lab.
Rocket Lab. Thank you. So we interviewed him before Rocket Lab was a thing. It was $2 a share, I think, maybe $3 a share. So I took leaps to 7, and it went up to like 40 years, 45, 49.
Ooh, yeah, that's
So
beautiful.
that was
So you
crazy.
got to sell those. You probably got to sell those for like $4,000 a contract, right?
Yeah,
So
I think
yeah,
I
that's
did. I
fucking
made
huge.
like 60 grand on those things
That's
initially.
beautiful. That's
So,
beautiful. Absolutely.
but I mean, I got lucky. But I like leaps are great because you could if you think over the next year or two the stock's going to do really really well, you don't have to guess and get caught up in like the weeklies, right, where you just go to zero right away. And I've done that a few times too, where I'll take like something 2 weeks out, and then I'll take something like 2 years out. And it's very good visually, I'd say, for beginners to kind of see that, to see the
Oh
actual
yeah.
data work
The
out.
the contrast is like really stark. Now, granted, when you are trading something that's lower DTE and it's going your way, like those gains are going to be much more explosive. Um, right? Like you might only be getting like maybe 1.2 uh x leverage on some of these leaps. You might be getting 1.5, 2 at the max if it's like really far out of the money.
Mhm.
And things are changing so rapidly, right? The price is changing so rapidly that you're getting like that IV pump, right? You're getting the implied volatility value, right? Volatility has value. Um, you're getting the value of the implied volatility just skyrocketing because there's so much volatility and there's so much velocity like in the changing of price, right?
Mhm.
So, when you're doing something that's like a weekly expiry or short term in general, Like you are trading in a very high risk, high reward way, right? It's kind of all or nothing.
Yeah. I
And
mean,
you need to be able to justify that and size appropriately, which is usually just sizing small, to
mhm.
be honest.
I always view it as like every option. So it was 2 months ago, 3 months ago. We had an epic run where Jody and I were just like crushing it. We're like, oh, do we even need to do the podcast anymore? We're day traders now. We're like incredible. And then the next week, half of the gains that we had, disappeared. So it can come
It
and
can
go very
turn very
quick.
quickly.
I was looking, and do you look ever directionally at options for your equity plays? For instance, like Dell, I was looking at this morning because they should kick ass on their earnings, I think. And even if you go on the 911s calls for 500, that's 40 points out basically. They're still $26, So
And see, and that's the
they were
that's
35
that
today this morning, which is crazy.
yeah, and that's the IV, right? That's
Mhm.
the chance that something truly crazy can happen. That's you know uh that's being priced into those option contracts. And let's say that, you know, let's say that everything is on par with expectations and there's no real meaningful change, okay, that comes through for Dell in this instance. Like let's say
Mm,
hypothetically that happens, right? Then what we are going to see is that those options are going to get absolutely crushed and they'll
mhm.
probably lose like half of their value just because the chance of something crazy happening is instantly diminished the second that they release earnings that are on par with expectations.
Um, Real quick, what's going on? You said that Trump's messing around. I like saw a few things with like South Korea we were backing out of.
All right, so
Here and
we gotta talk a little bit about this, and obviously we want to
take this off. Here we go.
preface this by saying that political conversation is contentious, right? You have a lot of people that are going to feel very, very strongly one way,
There we
but something that we should be aware of sometimes is politics, whether we like it or not, whether we agree with them politically or not. It is our job as traders, as participants in the market, as speculators, right? Observers and speculators, to understand what the implications may be. So yesterday, a few things came out. Number one was that Trump said that we are going to stop doing so many military exercises with South Korea, that he's not fond of doing them with South Korea, and that he considers Kim Jong-un of North Korea to be a very
go.
close
Boy, yeah.
friend. So, without trying to get too political here, what we need to understand is that most of Asia fucking hates this guy. They hate Kim Jong-un, right? So saying that, oh, I'm not that big a fan of doing anything with South Korea, I prefer North Korea, is essentially how that reads. That didn't really sit well with investors abroad, right?
Mhm.
And last night, I watched when the Asian session opened, right? I watched probably like triple the normal trading volume on NASDAQ come out.
Yeah.
And it was just all selling pressure, man. Like there was a mass exodus. And that was the reason for the big gap down this morning, right? Is because Asia sold it off so hard. Then London came in, they sold it off. And then by the time that New York pre-market rolled around, it was already over 1% red on
Mhm.
NASDAQ or QQQ, futures, options, whatever you're trading, or rather the ETF. So that didn't sit well with them, right? Number two, then in that same speech, he basically told Oman that if Oman is a country, okay,
Mhm.
for those of you that aren't aware. They are directly across the Strait of Hormuz from Iran. And Oman was trying to basically, they're trying to talk to Iran and talk about what the future of, I guess, like control of the Strait of Hormuz is going to be, right? Because they both are literally right on it. So it's understandable that they would want to see, what their neighbor is thinking in regards to their most important waterway, really the only waterway that they have.
Mhm.
So, um, with that news coming out, Trump then said basically that they need to stay out of it. They need to not talk to Iran, or we're going to bomb the shit out of them too, which is like crazy escalatory, right? So, uh, that's something that didn't really jive with investors and with traders, right? Like, we, as traders, we do not like the unknown. Okay. The unknown is terrifying. And it's not just for us as retail traders and investors, it's for institutional investors as well, right?
Mhm.
Like, the unknown, I mean, you'll see kind of going into like rate decisions where things aren't clear, going into inflation data, right? Major data drops. You'll see that the market just kind of sits, right? And it crabs, right? It just moves sideways. It consolidates until that news comes out. And then when that news releases and everyone digests it, that's when the real move directionally begins, right? So that happened. That wasn't great. And then we also ended up getting news that was reported on mainstream media, and this isn't verified. Okay, I want to preface what I'm about to say by saying that this is an unverified leak that was reported by, I believe, CNBC and somebody else that I can't readily think of off the top of my head. Probably not Fox.
Mhm.
That there were discussions taking place in the White House about the potential use of nuclear bombs on Iran. And regardless of if this is true or not, uh, number one, I don't think that that's ever going to happen because there
So,
are a number of steps that need to be taken before anything like that can be launched. And it's not just on Trump. It's not just on Hegseth. They also have to run it by like 10 different fucking generals and the Secretary of State, right? Like there's a whole process to even get the full code to launch one of them assembled, right? Everyone has a piece of a code. So that way nobody can do this alone, right?
Mhm.
It's one of the checks and balances regarding our nuclear arms. So I don't think that this will end up happening, even if it is pushed for, which again we don't have confirmation of. But regardless of this information being confirmed or not, like, that is a crazy fucking escalation. This is the first time that nuclear arms have been threatened by the U.S. since they were actually dropped on Japan in the 1940s, right, in 45.
Yeah.
So
I don't think that. I mean, do you think the two are connected though? Like in terms of him, because Trump will say shit all the time, right? Like, and
he just talks, man. He
he
talks
talks
half the time. Half the time,
right?
he doesn't. He either does. It seems like he doesn't know what he's talking about, or he'll say something and then immediately, like 2 minutes later, contradict it by saying the opposite. It's like you remember on old Chappelle Show episode with Rick James where he's like, "Oh, I'm not gonna put my feet on that couch. I got more sense than that." Yeah, I remember putting my feet on that couch. Like, it's like that energy, but on
Yeah.
the news 24/7.
Yeah.
So
Well, I said this last time too. Like, I noticed this his first go around. Like, his tweets meant less and less as as he went further to the 4 years, and I think that's starting to happen now
I think
potentially.
so too.
Because you cry wolf enough times. How many times did we say we're going to bomb Iran? We're not going to bomb Iran. We're going to bomb Iran. We're not going to bomb Iran. I agree with you. I don't think that
Yeah,
we
no
will
one can take
continue.
it seriously. I mean,
Uh,
it's hard to take it seriously when you have I like, if we were going by his tweets and by the things that he said, we have ended this war 50 times at this point.
right.
Like this war ends every Monday and it starts up again on Friday, right? That was the meme forever. So
Now things can turn quick though too. Are you looking at anything, I guess, for next week, taking advantage of the lower prices this week right now? That are you gonna let this play out a little bit?
nothing really new, to be honest with you. I'm kind of just sitting in a lot of the things that I was sitting in.
Yeah.
I did open a very, very small bearish position on SpaceX today, just because I kind of see that they are consolidating and they appear to be struggling to get through this like 145 area. But aside from that, I mean, I'm just kind of sitting in a lot of the same things. I think that before the end of the day, that I'm probably going to buy a little bit more QXO, just because I like to kind of average in over the course of weeks or months, usually, into these longer swings. And I do want to take advantage of that lower price. And I was considering maybe buying a little bit more BlackBerry, but I'm a little heavy in it, so I don't know how much more I'll buy. Even though I do really believe in the company, right? I just want to make sure that I am protecting myself, right? So, yeah, nothing too new happening.
So Citadel is urging the SEC to reconsider proposal to scrap key stock trading rule. I don't know if you saw this at all.
No, which one is it?
So I guess I'll just pull up some notes so I can sound smarter. Since 2005, a regulation called Rule 611, Regulation NMS, the so-called trade-through rule, has required that your stock order gets executed at the best displayed price available anywhere in the market. Your broker cannot fill you at 50.02 when another exchange is showing 50.01. So I was reading in this basically like without the rule. So here's the core risk is simple. Without the rule, brokers would be able to bypass better displayed exchange prices more easily. More customer orders could be internalized or sent to alternative venues and incentivize. And the incentive to post competitive quotes on public markets would shrink. In practice, this means the price protection you take for granted every time you hit buy on Robinhood or Schwab would become a courtesy rather than a legal requirement. So it's basically not good for retail.
Basically, what we have to understand about Citadel, right, is that number one, Citadel is two different entities. So they have the hedge fund and then they have the market making business. And the market making business, the way that they make money is by paying your broker, right, or paying brokers to send order flow to them, at which point they take the opposite trade of you. So they trade against you. Okay. And, when they are doing that, they are adding liquidity, which is fair, right? Liquidity is added. We do see more stable markets in this way, but it also gives them incentive to kind of fuck you over, right? Like, why would they pay your broker to make you money? Trading is a zero-sum game. Investing is a zero-sum game. For every dollar that you make, somebody has to lose. For every dollar you lose, somebody makes a dollar. Okay. So again, if we think about this very logically and very rationally and just in a straightforward way, why would they pay for your orders, for the right to fill your orders, if they weren't making more money off of it?
Mm-hmm.
Now, as far as like the internalization goes, we should probably talk about what internalization means. So the best way that I like to describe internalization is it's kind of like boofing. Okay. And
Say that again.
boofing, that would be like if you're gonna go to prison, right? And you want to sneak drugs in, you
I
just
thought you
shove
said,
it up
okay.
your ass.
This is the first time
Right-
boofing has been
right
said on
into
the
the
show.
right into the prison wallet. Okay.
Love it. Okay.
So when they are internalizing orders, what is happening is that you say, I want to buy 100 shares of, I want to buy 100 shares of Apple. And they're like, great, we're going to sell you 100 shares of Apple. We'll sell it to you right now. And instead of selling it to you and then going out to the open market and picking it up, what they do is they sell it to you and then they say, well, we'll just go and clean that up later. Right. So that way your order never hits the tape. So there's no actual price discovery. They take on a negative position. You buy, you take on the positive position. Right. And then at some point, after enough volume has been held back, right, then they go and they pick everything up in this big batch. So they can essentially, through internalization, they can essentially suppress price discovery, right? And this isn't like some crazy fucking conspiracy theory, right? Like, this is just how it works. This is an exemption that market makers get for having that bona fide market maker status, right? This is something that they're allowed to do that others are not. And, the implications of it are pretty, how do I put this? The implications are pretty damning, right? Does it, on one hand, provide extra liquidity? Absolutely. It absolutely does. But does it allow for more like kind of fuckery on the back end to rob people blind when they don't understand the process? Absolutely. It absolutely does. Because if you're going to short and short and short, and then you're not going to like clear and settle it for another, 3 weeks, well, then none of those buys are going to hit until 3 weeks later, which means that some of that selling pressure that's coming through that maybe they allow to go through is going to drag the stock down until everyone gets bored or they get scared and they get out of it. And then when they get out of it, guess who's there to come pick it up and clear up their shorts that they're holding on their books? Your good friend Citadel, right? And this isn't specific to Citadel. This is how market makers operate. So it's in Citadel's best interest that these kinds of orders, benefit them tremendously, right? Tremendously. So
I made this visual on ChatGPT. It's really incredible. I just took the whole article and I said, make a visual of this. And it, in 30 seconds, it makes this. It's an unbelievable world we live in. So overall, is this like, who votes on this? Do you know how this all works?
yeah,
SEC?
so this is going to be the SEC, right?
Okay.
This is going to be the SEC, and I'm really hoping that they don't do this.
Why would they want to? I guess like what's the
so
pat their friends like in institutional on the back or
well so there might be a few reasons too, and some of them are a little bit more speculative than others. So I guess one of them, the first one, right, which is a little bit more speculative, would be they would want to how do I put this? They want to make sure people in the SEC, right, want to make sure that when they leave the SEC that they can get a job. And usually when people leave the SEC, a lot of times they go and they work for these hedge funds, right? They go and work for market makers. They go and work for large institutions in general. So would you want to piss off your potential employer?
Yeah.
No, right?
No, sorry, I was agreeing with. I wasn't saying yes. I agree with.
You don't want to piss off your potential future employer. So that's number one, right? And number two, like they want to I would say that Citadel would benefit immensely from this, because then they would not be restricted to what price they can sell it to you at. They can sell it to you at astronomically wrong prices. And even if it's just a few cents difference, right? When you are processing literally billions of transactions a day, that adds up very quickly, right? As a market maker, especially as the largest market maker in the US. Like they have more skin in this game than anybody else. So I think that that would be a reason that I would assume that Citadel would want to get rid of this. It's saying down at the bottom that Citadel wants this rule to stay, which I
Right.
think that the article was saying something else, right?
No, I took this from the article. Citadel wants to keep it. SEC wants to scrap Rule 611.
Yeah. Well, it is a bad. I think that it is a bad deal for retail, and I think that Citadel already wins, right? Um, I think that Citadel already wins under the current rule set. And I think that they would actually probably win even more under this other rule set where they're allowed to give you worse fills. Like I
So their quote was, eliminating the rule would reduce liquidity, weaken price discovery, and leave retail investors worse off. Here's probably the best little piece here.
I think so. I think so. And I, like for what it's worth, I say that I I would say that while I am not a fan of payment for order flow, and I'm not necessarily a fan of all of the games that get played, um, you know, do I think that these are good people that are out for the benefit of you and I, right? Like the people like Citadel? No,
Yeah.
certainly not. They're out for their own benefit.
Right.
But what I will also say is that Ken Griffin is not a stupid man. Like that guy is incredibly smart. His interests don't align with mine because he wants to take money from me. But I don't think that he's a dumb person. If you listen to him talk, he is very intelligent. He knows what he's talking about. He has built a fucking massive empire on this. But there's always an ulterior motive, right? Which we saw like really, really recently with situational awareness.
Yeah.
You remember, oh man, everything's gonna crash. The tech trade is over. This is a big bubble, and rates are gonna get hiked. And then situational awareness gets liquidated. Rest in peace, poor 25-year-old boy Leopold. He sells off his entire public portfolio, right? All the public equities.
To Ken Griffin.
Sells them off.
Wiped it.
He sells them to Ken Griffin's hedge fund, Citadel, right? Not Citadel Securities, but Citadel, right? So he sells it to Citadel at a depressed price and then a further 10% discount from there because there wasn't enough liquidity for them to be able to sell it on the open market, right? So
on his wedding weekend, nonetheless.
On his wedding weekend, get fucking wrecked, right? So that should be a lesson about over leveraging, right? In and of itself.
Well, and it shows how big of sharks these guys are. Yeah. He literally said, I mean, it was waiting until he was vulnerable and probably not paying attention as much.
Absolutely. Well, they waited for him to get over leveraged. They see it in the filings. So then they start going out on Bloomberg saying rates are going to get hiked. Everything's over. The second that situational awareness gets liquidated, suddenly Citadel the next day, their tune changes. Oh, AI trades back on. We're super bullish on everything. Everything's super undervalued, especially the stuff that we just bought. That yesterday we said was going to zero. Today, fuck it, it's going to the goddamn moon.
Yeah.
So it's funny how you can watch them change their tune depending on what benefits them the most. And one of the big things that I think that as traders that we should take away from this is something that that there's an old interview from Jim Cramer that was talking about how reality doesn't really matter. The most important thing is that you control the narrative, especially if you are, especially if you are in any kind of institutional investing position, right? Whether that be a hedge fund, a bank, it's important that you control the narrative. So if you need to exit a position, then naturally the thing that you would do would be to hype up that position and tell everyone that this is the best company, because you need buyers to exit into. You need exit liquidity, right?
That happens all the time
Happens all the
with
time.
funds.
And if you do not know who the exit liquidity is, and you don't know the profit mechanism, it's probably because you are the exit liquidity and you are ultimately the profit mechanism.
Is this Jim Cramer's whole shtick? Do you think
That is basically
he goes on
his
buy,
shtick.
buy.
Yeah,
All other people are getting out.
absolutely. So, it's funny because, and I guess we're kind of taking like a little bit of a quick detour here, but have you ever read Manufactured Consent by Noam Chomsky?
I've not. Is that a book I need to read?
I would say so. It's really interesting. Like, regardless, it's just a good argument. But one of the big points that he makes in there is, let's think about the news, right? Let's think about mainstream media. So how do these news outlets make their money? Advertising, right? So then if they make their money from advertising primarily, then their customers are not you and I. You and I are the product. Their customers are advertisers, right? Then we can go and we can look at who has the controlling interest in these companies. Well, it's banks, it's large institutions. So if your boss calls you and says, hey, on your show, we need you to talk about how great this company is and how undervalued this stock is, I mean, you're going to do it because these guys own your business. They own the company that you work for, right?
With the vaccines and Pfizer, that was a huge thing. Pfizer has like 70% of the ads.
Yeah.
So it was like a big thing that they were all talking, positively about these. And
absolutely, right? So we see this happen literally over and over and over again throughout time. And who usually ends up, holding the bag at the end, right? It's us.
Yeah.
It's you and I. It's retail investors. So, some people would say trust but verify. I say don't trust whatsoever. Go look yourself.
Yeah.
Go make your own decision. Because, maybe buying Palantir is a great idea. Maybe, it's a strong business. I would agree with that. Maybe buying it at the all-time high going into earnings isn't the best idea. Maybe there's an ulterior motive from the people that are telling you to buy, and it's because they need to sell.
Yeah.
And they don't want to have to push the price down as they sell. They don't want to bag their own eggs.
Well, market fuckery is the French way to say that.
Yeah. And it happens all the time, right? It's part of dealing with markets, right? It's the narrative matters a hell of a lot more than the truth. So,
well, I wish I was healthier for this conversation because we could keep going and I'd be able to jump in a little bit more.
Say you look like you're feeling horrible.
Just joining, but if you guys seen me look a little prettier before, I'm dealing with an illness right now, and so I'm gonna go take a little nap. But Father of Trades, always a pleasure, man. We will be back next Tuesday
with some mini monsters.
With some mini monsters. This was a little last minute options education, slower day in the markets. So yes, we'll bring mini monsters back. So appreciate your time, dude. And
absolutely, brother.
I'm gonna get some rest.
All right. Hope you feel better. I'll talk to you soon, man.
Thanks, man.
Everybody, see you. Thanks for coming.
Bye. Yes, sir.
Cause we pop them like over and vodka. C3, okay, a millionaire.